If Iran escalates, the dollar faces its biggest test. Now a new crisis is unfolding, one hitting markets right now. The Iran war is pushing oil and gas prices sharply higher. Energy supply fears are driving volatility. Stock markets are sliding. Investors are weighing inflation risks. So here's the real question. If an oil shock from the Iran conflict hits a global financial system already under stress, the shock doesn't stay in oil markets. It hits credit markets. It hits currencies. It hits governments. Before understanding what the shock could trigger, we need to understand why the dollar usually gains power when the world panics. The dollar's strange superpower. When the world panics, the dollar usually gets stronger. In 2008, during the global financial crisis, banks were collapsing and lending froze. In 2020, during the pandemic, markets crashed worldwide. Instead of fleeing, trillions of dollars flowed into the US. Investors poured money into US government bonds, lending cash to the US in exchange for interest because in chaos they chase safety, not profit. US government debt has one reputation. It gets paid. On time. In full. Even in crisis. So demand surges. When demand rises, bond prices rise.
Why?
Because more people are trying to buy the same bond, so they're willing to pay more for it. Now here's the key. Each bond pays a fixed amount of money every year. Let's say a bond pays $50 per year. If the bond costs $1,000, your return is 5%. But if demand rises and the price gets pushed up to $1,200, you're still only getting $50. You paid more, but the payment didn't change. So your return drops. And that return is what we call the interest rate, or yield. Higher price. Same payment. Lower return. That's why when bond prices rise, interest rates fall. Which means, during panic, America often pays less to borrow money. That's financial gravity. And it rests on two pillars: energy
And trust.
To understand how the Iran conflict could challenge the system, we need to start with the first pillar: energy. Energy, Iran's wild card. Almost every barrel of oil on Earth is priced in US dollars. So when oil prices spike, especially because of a major conflict like the Iran war, it matters everywhere. Oil is the heartbeat of the economy. Higher oil means higher fuel, higher transport costs, higher food prices, higher cost of everything. Oil isn't just fuel, it's the engine that moves trucks, planes, and supply chains. And because the Strait of Hormuz, one of the world's most critical oil choke points, is threatened by conflict, oil has jumped, gas prices have surged, inflation pressure is rising. Inflation means prices across the economy rise faster: groceries, rent, energy, everything. And if inflation spikes, central banks may keep interest rates higher for longer. That hits borrowing costs for you and your family. That's how geopolitical tension turns into pressure on your wallet. But energy shocks alone don't determine the system. The second pillar holding the dollar's dominance is trust. Trust. What keeps the system together? Countries earn dollars from trade. They reinvest them into US government bonds. The US bond market is huge, over $25 trillion, and deep enough to absorb massive flows even in panic. That's why in the 2008 financial crisis. That's why in the 2020 pandemic. When fear spiked, money didn't scatter. It ran to the dollar. Every time that happens, more demand for US debt, more demand for dollars, more global influence.
But now,
for the first time in decades, some countries are trying to reduce that dependence. Trade by trade, settling more deals outside the dollar. Reserve by reserve, shifting central bank savings into other assets. Bond by bond, buying less US debt.
slowly.
But steadily. And the Iran conflict may accelerate that shift faster than many expected. Iran's real impact.
Right now.
About 60% of global reserves are still held in US dollars. About 80% of global trade is priced in dollars. That's dominance. But dominance creates dependence. And dependence creates vulnerability. So BRICS countries are adjusting. More trade in local currencies. Alternative payment systems. Record gold purchases. Not collapse. Diversification. But here's where Iran ties directly into this. Oil prices are already up sharply because of the conflict. Gas prices have surged. Stock markets are shaky. If oil remains high for weeks or spikes dramatically, inflation could accelerate even further. Higher inflation plus geopolitical risk equals higher global borrowing costs. And even a small drop in demand for US debt means bond prices fall, interest rates rise, borrowing costs rise, mortgage loans get more expensive, business loans cost more, government debt costs more. That's how an oil shock feeds directly into monthly payments. And high borrowing costs are where financial systems start to crack. And that leads to the ultimate question: what happens when the next real panic hits? The real test. Reserve currencies aren't replaced in conferences. They're tested in panic. In 2008 financial crisis, in 2020 pandemic, in those moments, trillions moved in days, out of risk, into safety. And when panic hits, investors don't experiment. They run to what they trust. Right now, that's still the dollar. Because behind it stands the Federal Reserve, America's central bank. When markets freeze, lending stalls, buyers disappear, the Federal Reserve can create emergency cash and flood the system. Fast, aggressive, unlimited if needed. BRICS doesn't have one unified central bank. It has no single massive bond market that can swallow trillions without chaos. And some BRICS members still restrict how quickly money can move out of their countries during panic. In crises, speed matters. If investors can't move instantly, they won't trust it. And reserve status is decided in fear, not calm. Which brings us to the moment the world may soon face. The dollar isn't collapsing tomorrow, but something is changing. For the first time in decades, its dominance is being openly questioned. Before the dollar, the world ran on the British pound, and that didn't end overnight either. It eroded. Then a global crisis accelerated everything. Now look at today. The Iran war is escalating. Oil markets are reacting. Geopolitical tensions are rising. If oil keeps spiking, if inflation returns, if regional conflict spreads, and if tensions spiral into something far bigger, even the kind of global confrontation people fear could resemble World War III. Where will trillions run next? Because the next panic won't give anyone time to prepare. And because reserve currencies aren't tested in calm times. They're tested when the world feels unstable. And if the Iran war becomes the trigger for a wider global shock, that's when the real test begins. Where capital runs during panic, that's where power lives. And in moments when history feels like it's shifting, the world chooses fast. Thank you for watching and subscribe for more videos like this.